Serabi Gold has recently reported record annual gold production of almost 40,000 ounces of gold from its wholly owned mines in northern Brazil. The Chief Executive, Mike Hodgson, who joins us now with some more. Mike, welcome. We spoke to you just over a year ago, and at that point you were fairly bullish for 2016, and I think actually your projections then were well shy of the 40,000. But here we are now sitting here at a number just shy of 40,000 ounces of gold last year. And I notice actually if you break it down, the fourth quarter was a little bit weaker than the third quarter. How's 2017 started?
Very well. Same rhythm, really. We had a terrific year last year operationally, as you say. We produced. We started the year with around 37,000 ounces guidance. We actually adjusted that to 39 at the end of Q3 to 39,000 ounces, and we did just shy of 40, which was terrific. More of the same this year. I think we can do a little bit better. We're certainly saying about 40,000 ounces for the year, and we hope to do a little bit better than that.
Yeah. One of the interesting points I noticed from your most recent note is that you are improving gold recoveries because you've installed some new technology which helps you. Explain a bit more about that and what sort of recovery rate are you now getting?
Yes, in the process plant, we've over the last sort of 2-3 years since we put the mine back in production, we're on a sort of on a staged basis. We've actually been improving the process plant, and now it's really running very well. The last part of that was actually putting in this thing. It's called a carbon regeneration kiln. It means that you just improve the quality of the recovery. It means probably we'll get about another 1 to 2% recovery at the end, which is up to about 100 ounces a month. So it's very significant development.
I believe you've got about 21,000 tonnes of ore with an average grade of 4 grams per tonne, I think, which is waiting in the wings.
Yeah, that's a surface stockpile we've got, which is a legacy of the mine operating or starting about 6 months before the plant. And to be honest, the plant's never actually been able to catch up. And, constantly we're putting in a little bit more process capacity. I'm reluctant to do that because, there's this tendency to, if you've got plant capacity, there's this mentality to fill it with anything, just to actually, which I'm very conscious to keep the emphasis on the quality. And if slowly we're eating into that, but it's a nice buffer to have. And I know people might say, well, it's gold sleeping, etc. But at the end of the day, we're focusing on 8-9 grams, not 4 grams. That's top-up material.
So the 40,000 ounces that you're going to produce this year doesn't really include that stockpile?
It does include some of it, but it's a proportion of it, but certainly not all of it. No.
Yeah. I noticed as well that you are now pretty much or completely debt-free, I think. Is that right, from the balance sheet?
That's right, yeah. Last year was really all about delivering on the guidance and clearing our debt. There's a little bit of debt there, but we're virtually debt-free. So despite facing some tough economic headwinds last year in terms of the gold price fluctuating a lot, in terms of the real strengthening, which no one expected in the second half of the year, we still managed to pay off the vast majority of our debt, which was really pleasing.
It's interesting, actually, looking at the share price. If we look at the share price over, 2.5 years or so, you can get a real feel for the way the share price has responded, in part, I know, to the rise in the price of gold that we saw midway last year. Since then, there's been this little bit of a pullback. What other dynamics are at work here? Because you've got costs in local currency in Brazil. Yes. Obviously, you've got one eye on the dollar because we've got a dollar commodity here. Here you're listed in London. I mean, what's going on financially?
Well, simplistically, we live and die by the gold price in Brazilian reais. Of course, 80-90% of our costs are in Brazilian reais. So the margin is really on costs are in reais. What is the gold price doing in reais? That's the real money that we make. In fact, last year, us, along with a number of other Brazilian producers, literally had to state on all their corporate presentations, all-in sustaining costs were up by about 10-15%, not because costs are out of control, absolutely not. It's simply because of the exchange rate change. The Brazilian real went from 4 reais to 3 reais basically through 2016. It's opened this year with about 3.1, and that's the reality. It's been a bit of a surprise to most of the financial markets that this has happened. Most people predicted after the impeachment of the Brazilian president it was actually going to go the other way. It didn't. There are still good yields on accounts in Brazil, so I think this is the reason you see money coming into Brazil. But it's something which we don't see sustainable, and the general forecasts are for the end of this year it'll be moving back towards 3.3, 3.4. But that's really it. So to a point, we see the gold price going up in US dollars, but it's what is it doing in Brazilian reais? That's the key to us.
Okay, so just to simplify that, when the Brazilian real goes down, your margins increase.
Correct.
Okay, all right. So let's take a look now a little bit more about what's going on, because politically in Brazil, there's still not a resolution to last year's issues. Do you see this as a real issue for anybody operating in Brazil, not just Serabi? How comfortable are you at the moment?
I think it's very unlikely that the gold price will go anywhere below, well, the real will ever weaken below 3. So therefore, we're okay with that. We're a small, high-quality operation. We've probably got the lowest or one of the lower cash costs that you could have, purely because of our grade. I emphasise again, our grades are 9-10 grams per tonne. We're a really high grade quality, not quantity operation. So we really can keep a lid on our costs. So we'll always have we'll probably always be in the lowest 10% to 10 percentile in terms of cost. It swings and roundabouts. I mean, the real can strengthen, the real can weaken, and I think when it weakens, we're brilliantly positioned to actually to make a good income out of it. It's clearly something which we have to watch all the time, but it's benefits as well as negatives.
Something else I wanted to pick up out of the statement you made recently is the drilling. You've been undertaking more drilling. How do you see 2017 developing in terms of the mine expansion at your mines in northern Brazil, and how much of it is going to be through acquisition? Have you got your eyes on any targets?
We're always looking at acquisitions, but I think we, like many a producer in Brazil, haven't seen our share price appreciate like for example, the Canadian explorers and developers has. The producers generally haven't seen that growth. So our currency is limited. Our biggest bang for our buck is organic growth. There's no doubt about that. And we've had some terrific results last year. Last year was all about delivering on guidance and killing this debt or getting it mostly gone, which we've done. So the margin that we've got this year, we're going to use to focus on organic growth. And we started that last year. We did some geophysics, mine site exploration, head frame exploration, I like to call it, which is literally looking in your own backyard. Obviously that makes sense because if you've got your process plant there and your license there, any exploration success you have, you can turn into production ounces quickly. We've got some terrific opportunities, some of which have laid dormant since 2012 before we put the mine back into production, and new ones we've found, which is strike extensions and satellite ore bodies. And we're very determined to actually get our resource up and go to, it's our roadmap to 100,000 ounces organically. We're going to start a drilling program this year on 2 satellites, one at São Chico and one at Palito. São Chico being the strike extension of our deposit there, and at Palito, again, two satellites which look like strike extensions as well, which again can, a bit like São Chico, which is another little sort of small satellite mine, bring in 2 or 3 others and send it to the Palito plant. So that's certainly going to be our focus this year, because at the end of the day we haven't got the debt payment hanging over us anyway like we had in 2016.
Yeah, you mentioned the long-term roadmap, 100,000 ounces. What's your long-term plan for that in terms of years?
I think we can probably be at 60,000 ounces in 2 to 3 years, and I think shortly after that we would. It's always a question of funding. You can if you've got sort of $10 million to throw at exploration now, we could do it a lot faster. I mean, our plan here is to fund this out of cash flow, so we have to be cognizant that we can only go to a certain speed. But certainly, I don't see why we can't be getting to 60 by in a couple of years, and then 1 or 2 years after that.
The tone of your commentary would seem to insist that you want to imply to shareholders that you're not going to go to the market to raise money, you're just going to use cash flow and a continuation
certainly
basis.
Certainly try to. I mean, if we can find the opportunity when the stock pops a little bit and we can actually raise a little bit of money, certainly at a good price, that's something which you wouldn't rule out, but certainly it's not something which is, we don't want to destroy value for our loyal shareholders. Good.
Okay, all right, Mike, it's been a pleasure. Thanks indeed for dropping by. Talk to us a little bit more about what's going on in Brazil at the 2 mines there for Serabi Gold. That's Mike Hodgson from Serabi.